Welcome back to Dinar Community. What we're sharing today is not another cycle of rumor or recycled speculation. Over the years, the internet has been overwhelmed by unverified, intel drops, anonymous leaks, and forum chatter predicting currency revaluations that never came to pass. This report is different. What we're revealing today originates from verified institutional channels, not social media, not hearsay. The information connects directly to two of the most influential entities in global finance, the Central Bank of Iraq (CBI) and Chase Bank in the United States. Both organizations are pillars of the modern monetary framework. Their movements, internal signals, and procedural updates carry immense weight because they often precede major financial recalibrations with real consequences for global trade, reserves, and valuation mechanisms. Unlike the speculative narratives circulating online, the data we are presenting stems from timestamped communications and confirmed operational activity, providing a factual foundation for understanding what may be one of the most significant global monetary shifts in decades. These developments point toward a transformative period for both the Iraqi Dinar (IQD) and the Vietnamese Dong (VND), two currencies long viewed as undervalued due to historical constraints. The CBI bulletin that sparked global attention. The story begins with an extraordinary update from the Central Bank of Iraq. An internal bulletin, briefly visible within the bank's secure network, showed an official exchange rate change, moving from the long-standing 1310 IQD per USD to 480 Iraqi dinars per USD. Such a sudden and precise modification is not something that can be dismissed as a system glitch. Central bank networks operate under multiple layers of verification, and even minor rate entries trigger automated logs across several institutional systems. This fleeting but critical update was immediately picked up by global algorithmic monitors and institutional trading systems, ensuring it could not simply be erased or overlooked. Even though the rate reverted to maintenance mode shortly afterward, the data had already been mirrored across several financial terminals, alerting analysts worldwide. The appearance of 480 Iraqi dinars per USD sent a shockwave through financial circles, suggesting that Iraq may be entering the final stages of monetary restructuring or a currency realignment, the kind of shift that typically occurs only once in a generation. Chase Bank's Tier 3 Currency Watch Alert. Roughly 2 hours after the CBI bulletin, something remarkable occurred in the United States. At 10:08 a.m. Eastern Time, Chase Bank's institutional foreign exchange system issued a Tier 3 internal alert. These alerts are among the most sensitive communications within a bank. They are used only when potential market-altering events are in motion and are viewed exclusively by authorized senior FX personnel. This alert referenced only two currencies: the Iraqi Dinar (IQD), the Vietnamese Dong (VND). The internal modeling figures displayed were astonishing: 81 United States cents per IQD and 0.4747 United States dollars per VND. Now, these weren't public trading numbers. They were part of an internal stress test, simulations banks conduct to prepare for high-impact valuation changes. But their specificity, timing, and alignment with real-world speculation immediately raised eyebrows among market observers. Historically, such exercises are not random. When a major bank like Chase simulates revaluation parameters for specific currencies, particularly those long rumored to be under review, it signals that contingency planning has entered its final phase. Typically, Tier 3 modeling occurs within 72 to 96 hours of a potential live event, underscoring the seriousness of this alert. Vietnam's coordinated measures. At the same time, the State Bank of Vietnam (SBV) circulated a confidential internal directive to major domestic financial branches. The document reportedly restricted the physical export of the Vietnamese Dong, limiting its movement outside the nation's banking infrastructure. Such action is not arbitrary. Central banks historically impose similar restrictions ahead of revaluation events or systemic recalibrations to prevent speculative manipulation and ensure internal liquidity stability. By doing so, Vietnam appears to be positioning its financial system for a controlled transition, aligning with the same preparatory behavior observed in Iraq and within U.S. institutional systems. A pattern of global synchronization. Viewed individually, these incidents could be dismissed as coincidences. But taken together, Iraq's internal bulletin, Chase's tier alert, and Vietnam's currency movement restrictions, they form a clear pattern of coordinated institutional readiness. Independent reports and insider memos now suggest that these developments are being monitored or guided by larger international entities, including the International Monetary Fund (IMF) and the U.S. Treasury Department. For years, economists have argued that currencies like the IQD and VND have been artificially suppressed, influenced by sanctions, geopolitical conflicts, and monetary controls. The alignment of current activity suggests that the world may be witnessing the first stage of restoring these currencies to fair market value, potentially triggering ripple effects throughout global trade and investment. U.S. Domestic exchange readiness. Within the United States, reports indicate that currency redemption centers in Texas, Florida, Ohio, and Arizona have been placed on final operational standby. Security protocols have been strengthened with biometric verification, encrypted communication channels, and sealed rate packets, typically distributed 48 hours before a live currency event. If verified, this means that exchange infrastructure is no longer in rehearsal mode but ready for execution, awaiting formal authorization. This degree of coordination between international banking systems, policy institutions, and logistical operations shows that the global financial community is not experimenting, it is executing a phased activation strategy. Preparation guidance for currency holders. For individuals holding IQD or VND, preparation is essential. 1. Organize documentation. Keep all purchase records, receipts, certificates of authenticity, and government-issued IDs together. These will be required for verification at exchange facilities. 2. Maintain discretion. Avoid posting or sharing details about your holdings online. Public exposure increases risks of scams or fraud. 3. Plan ahead. Research potential redemption options, whether standard centers or structured programs for higher value exchanges. 4. Consult professionals. Seek advice from certified financial, legal, and tax advisors to ensure compliance and optimize outcomes. 5. Stay informed. Monitor verified institutional updates and central bank communications rather than relying on social media speculation. Preparation and vigilance are the keys to navigating the unfolding transition effectively. The bigger picture. A global realignment in motion. What's happening now goes far beyond typical exchange adjustments. It points to a systemic restructuring of how undervalued currencies are measured and integrated into global trade. If the dinar and dong are indeed being realigned toward their intrinsic market strength, the effects could reshape economic benchmarks, adjust global trade balances, and set new standards for emerging markets worldwide. Financial institutions appear to be in the final synchronization phase, bridging simulations, policy actions, and operational readiness to ensure a controlled, secure rollout. After years of speculation, the convergence of real institutional signals, CBI adjustments, Chase Bank modeling, and SBV currency restrictions, suggests we are crossing from theory into action. The message to investors and observers is clear. This is no longer about if a revaluation happens, but when. Final thoughts and disclaimer. We may be witnessing the early stages of a historic monetary reset, one that could redefine global valuation standards for decades. However, as always, exercise caution and rely solely on verified, institutional information before making financial decisions. Disclaimer. This content is for informational and educational purposes only. It does not constitute financial, legal, or tax advice. Currency markets are inherently volatile, and while information herein is based on sources believed reliable, accuracy and timeliness cannot be guaranteed. Always consult qualified professionals before engaging in any foreign exchange activity or investment decision. All financial actions carry risk, including potential loss of capital. By reading this report, you acknowledge full responsibility for your decisions and understand that Dinar community assumes no liability for any outcomes resulting from this information. Like and subscribe for more videos.